Good evening, everyone, and welcome to the very first episode of Daily Finance Podcast. I'm Alex Thompson, coming to you live from our studios in New York.
And I'm Sarah Chen, joining you from Chicago. We're absolutely thrilled to launch this daily journey through the financial markets with all of you. Today is Tuesday, September 23rd, 2025, and what a day to kick things off.
Absolutely, Sarah, we've got some fascinating market movements to dig into today. The S&P 500 hit some impressive gains, but not all tech stocks followed suit. We're seeing some interesting divergence that's worth unpacking.
That's right, Alex. Plus, we'll be diving into the crypto markets where Bitcoin is showing some weakness while other major coins are painting a different picture. And we've got some compelling news from the Financial Times and Bloomberg about market optimism that's really driving today's action.
Before we jump in, let me just say how excited we are to bring you this daily dose of market intelligence. Whether you're a seasoned trader or just getting started on your investment journey, we're here to break down what's happening and why it matters to your portfolio.
Perfect, so let's dive right into today's market overview. Alex, the headline story today seems to be the broader market strength, particularly with the S&P 500.
Exactly, Sarah. The SPDR S&P 500 ETF, ticker symbol SPY, closed at $450.25, up $2.35 for the day. That translates to a solid gain of 52 hundredths of a percent.
Now, for our listeners who might be new to market terminology, the SPY is essentially a way to invest in the entire S&P 500 index through one exchange-traded fund. When we see SPY up over 0.5% in a single day, that's telling us that the broad market is feeling pretty optimistic.
Absolutely right, Sarah. And this gain is particularly noteworthy because it's happening amid what the Financial Times is calling a period of economic optimism. But here's where it gets interesting. Not all stocks participated equally in today's rally.
That's the perfect segue into some individual stock analysis. Let's talk about Apple first, because this is a name that virtually every investor has an opinion on. Apple closed at $185.75, but here's the kicker: it was actually down $1.20 for the day.
Right, so while the broader market was celebrating, Apple shareholders saw their positions decline by 64 hundredths of a percent. Now, Sarah, for someone who's maybe just starting to follow markets, what does it mean when a major stock like Apple moves opposite to the broader market trend?
Great question, Alex. When we see divergence like this, it often signals that investors are being selective about where they're putting their money. Apple represents about 6 to 7% of the S&P 500 by market capitalization, so the fact that the index was up while Apple was down suggests that other sectors or stocks were really pulling their weight.
Exactly, and speaking of stocks pulling their weight, let's talk about Alphabet, Google's parent company. This one tells a completely different story from Apple.
Oh, absolutely. Alphabet closed at $142.30, up $3.45. That's a gain of 2.48%, which is really strong for a single trading session, especially for a company of Alphabet's size.
For context, folks, a gain of nearly 2.5% in one day for a company worth over $1 trillion is quite significant. It suggests that investors are particularly bullish on Google's prospects right now.
And this ties directly into one of our news stories from Bloomberg today about tech stocks leading the market rally. It seems like investors are being very discriminating within the technology sector, favoring some names while pulling back from others.
That's a really important observation, Sarah. The technology sector isn't monolithic. We're seeing clear winners and losers even within the same broad category, which suggests investors are doing their homework and making thoughtful decisions rather than just buying everything tech-related.
Now, before we move on to crypto, I want to touch on market sentiment for a moment. When we see the S&P up over 0.5% on a Tuesday, that's generally a sign of healthy investor confidence. But the mixed signals from individual tech giants suggest that confidence isn't blind, it's selective.
Well said, and that selective confidence is exactly what we want to see in a mature, healthy market. It means price discovery is working properly. Now, let's shift gears and talk about cryptocurrency markets because they're telling their own unique story today.
Perfect transition, Alex. Let's start with the elephant in the room, Bitcoin. The world's largest cryptocurrency is trading at $111,776, but it's down 95 hundredths of a percent over the past 24 hours.
So Bitcoin is essentially flat to slightly negative. For our listeners who might be tracking Bitcoin for the first time, a price above $100,000 represents a pretty significant milestone that the crypto community has been watching closely.
Absolutely, Alex. The fact that Bitcoin is holding above six figures, even with today's modest decline, suggests that level has found some support. But let's contrast that with Ethereum, the second largest cryptocurrency.
Right, Ethereum is trading at $4,157.12, down 42 hundredths of a percent. So both Bitcoin and Ethereum are showing modest weakness today.
But here's where the crypto story gets interesting, Alex. Binance Coin, which is the native token of the world's largest cryptocurrency exchange, is trading at $1,011.77, and it's actually up 2.18%.
That's fascinating, Sarah. So while the two largest cryptocurrencies are showing weakness, we're seeing strength in what's essentially an exchange token. This could suggest that traders are positioning for increased activity, or it might reflect confidence in the Binance platform specifically.
Exactly, and for our listeners who are new to crypto, this is a perfect example of why it's important to look beyond just Bitcoin and Ethereum. The cryptocurrency market has hundreds of different tokens, each with their own use cases and market dynamics.
Sarah, I think this divergence in the crypto market mirrors what we're seeing in traditional equities today. Investors are being selective rather than buying everything in a particular category.
That's a really astute observation, Alex. Whether we're talking about individual tech stocks or different cryptocurrencies, today's market action suggests that investors are doing their research and making targeted bets rather than broad-based purchases.
Now let's dive deeper into today's news because the headlines are really driving a lot of today's market action. Sarah, we mentioned earlier that the Financial Times is reporting on economic optimism. Can you break down what that means for our listeners?
Absolutely, Alex. The Financial Times published a piece today with the headline, "Stock Market Reaches New Highs Amid Economic Optimism." The key takeaway is that major indices are continuing their upward trend because investors remain bullish on economic recovery.
And when we talk about economic recovery, we're generally referring to several key factors: employment levels, consumer spending, corporate earnings growth, and overall GDP expansion. The fact that markets are reaching new highs suggests that investors believe these fundamentals are strong.
Exactly, but here's what I find particularly interesting about this story, Alex. The phrase, "continue their upward trend," implies this isn't just a one-day phenomenon. We're looking at sustained optimism that's been building over time.
That's a crucial point, Sarah. One-day rallies can sometimes be driven by temporary factors or even just technical trading patterns, but sustained upward trends typically reflect genuine confidence in underlying economic conditions.
Right, and this connects directly to our second major news story from Bloomberg, which focuses specifically on technology companies. The headline reads, "Tech Stocks Lead Market Rally," and the description notes that technology companies are showing strong performance in today's trading session.
Now, this is where we need to be a bit careful with our analysis, folks. While Bloomberg is reporting that tech stocks are leading the rally, we saw mixed results when we looked at individual names like Apple and Alphabet earlier.
That's an excellent point, Alex. This is why we always encourage our listeners to look beyond the headlines and examine the actual data. Yes, some tech stocks like Alphabet had a great day, but Apple didn't participate in that rally.
Exactly, the technology sector is huge, encompassing everything from established giants like Apple and Microsoft to smaller software companies, semiconductor manufacturers, and emerging technology firms. When we see a headline about tech stocks, it's important to understand which specific segments or companies are driving that narrative.
And this brings up a broader point about media consumption and investment decision-making. Headlines are designed to capture attention quickly, but smart investors always dig deeper into the underlying data and specifics.
Well said, Sarah. In fact, this is a perfect teaching moment for our listeners. If you read that tech stocks are rallying but you own Apple, you might wonder why your investment didn't participate. The answer is that sector-wide trends don't necessarily apply to every single stock within that sector.
Right? And this is where diversification becomes so important. If you believe in the technology sector but don't want to bet on any single company, you might consider a technology-focused ETF that spreads your risk across multiple companies.
Great point. Now let's take a step back and think about what today's market action means for different types of investors. Sarah, if someone is just starting their investment journey, what should they take away from today's market movements?
For beginners, Alex, today's market provides several valuable lessons. First, markets can be complex and nuanced. The fact that the S&P 500 was up while Apple was down shows that you can't always predict individual stock performance based on overall market direction.
Absolutely. And second, I'd say today demonstrates the importance of looking at multiple data points rather than making decisions based on single headlines or individual stock movements.
Exactly, whether you're looking at traditional stocks or cryptocurrencies, diversification helps smooth out some of these individual company or token-specific risks. Today's performance of Binance Coin versus Bitcoin and Ethereum is a perfect example of that principle in action.
Now, for more experienced investors, today's market action might suggest some interesting tactical opportunities. The divergence between different tech stocks could indicate that there's still value to be found for investors willing to do their research.
Right, and the mixed signals in crypto might present opportunities for investors who understand the different use cases and market dynamics of various tokens. But as always, crypto investments should be considered higher risk and represent only a small portion of most portfolios.
Speaking of risk management, Sarah, let's talk about position sizing for a moment. When we see days like today where individual investments can move in different directions despite overall market strength, it really highlights why proper position sizing is so important.
Absolutely, Alex. If someone had put too much of their portfolio into Apple expecting it to follow the broader market higher, they would have been disappointed today. But if Apple represents an appropriate portion of a diversified portfolio, today's decline is much more manageable.
Exactly, and this applies whether we're talking about individual stocks, sector exposure, or even the split between traditional investments and alternative investments like cryptocurrency.
Now let's shift our focus to some technical analysis and what today's price action might tell us about future market direction. Alex, when you look at the S&P 500's move today, what do you see from a technical perspective?
Great question, Sarah. A gain of 0.52% on solid volume suggests healthy buying interest. The fact that we're seeing the Financial Times report on economic optimism coinciding with actual market gains suggests that the fundamental narrative and technical price action are aligned.
That's important because sometimes we see markets move up on low volume or without strong fundamental backing, which can be less sustainable. Today's action seems to have both technical strength and fundamental reasoning behind it.
Exactly, and when we look at the individual stock movements, Alphabet's gain of nearly 2.5% on what appears to be genuine buying interest suggests that investors aren't just randomly buying tech stocks. They're making specific bets on companies they believe have strong prospects.
Right, Apple's decline, while disappointing for shareholders today, doesn't necessarily indicate a fundamental problem with the company. Sometimes individual stocks need to consolidate or take a breather, even when the broader market is moving higher.
That's a really important point for our listeners to understand, Sarah. Not every stock moves up every day, even in a bull market. Healthy markets actually see this kind of rotation where money moves from some investments to others based on changing perceptions of value and opportunity.
Absolutely, and in the crypto space, the fact that different tokens are moving in different directions, Bitcoin and Ethereum down slightly while Binance Coin is up over 2%, suggests that crypto investors are also being selective rather than just buying everything.
Which brings us to an important discussion about correlation, Sarah. Sometimes different assets move together and sometimes they move independently. Today's action in both traditional stocks and crypto shows us examples of both phenomena.
Exactly, Alex. The S&P 500 and Alphabet moved in the same direction today, showing positive correlation. But Apple and the broader market moved in opposite directions, showing negative correlation. Understanding these relationships helps investors build better portfolios.
And in crypto, we saw Bitcoin and Ethereum both declining while Binance Coin rose, which shows that even within the cryptocurrency space, correlations aren't perfect. This is actually healthy for the maturation of crypto markets.
That's a great point. As cryptocurrency markets mature, we should expect to see more differentiation between different tokens based on their individual fundamentals and use cases, rather than everything moving up or down together.
Now, Sarah, let's talk about what investors should be watching for in the coming days and weeks. Based on today's action and the news flow we're seeing, what are the key factors that could drive market direction?
Well, Alex, the continued economic optimism that the Financial Times reported on will likely depend on upcoming economic data releases. Things like employment reports, inflation data, and corporate earnings will all help determine whether today's positive sentiment can be sustained.
Absolutely, and in the technology sector specifically, we'll want to watch for any company-specific news that might explain today's divergence between Apple and Alphabet. Sometimes individual stock movements precede broader news or earnings announcements.
Right, and for crypto investors, the performance of exchange tokens like Binance Coin relative to Bitcoin and Ethereum might signal changing dynamics in how people are using and trading cryptocurrencies.
That's an interesting observation, Sarah. If exchange tokens outperform, it could suggest that trading activity is increasing, which might be a leading indicator for the broader crypto market.
Exactly, and for all investors, regardless of what assets they hold, today's market action reinforces the importance of staying informed and maintaining a diversified approach rather than making big bets on single stocks or sectors.
Well said. Now, as we wrap up today's inaugural episode, let's summarize the key takeaways for our listeners. First, today's market showed us that even when the broader market is strong, individual investments can move in different directions.
Second, both traditional stocks and cryptocurrencies demonstrated that investors are being selective rather than buying everything in a particular category. This suggests healthy price discovery and mature market behavior.
Third, the news about economic optimism appears to be backed up by actual market performance, which is encouraging for the sustainability of current market levels.
And finally, today's mixed signals across different assets reinforce why diversification and proper position sizing are so important for long-term investment success.
Those are excellent takeaways, Sarah. Before we sign off, I want to thank all of our listeners for joining us for this inaugural episode of Daily Finance Podcast. We're committed to bringing you this level of analysis and insight every single trading day.
Absolutely, Alex. Whether you're commuting to work, exercising, or just taking a few minutes to catch up on market developments, we want to be your trusted source for understanding what's happening in financial markets and why it matters.
Tomorrow, we'll be back to break down whatever the markets throw at us. We'll continue to dig beyond the headlines, analyze the data, and provide you with actionable insights you can use in your own investment decision-making.
And remember, while we provide analysis and educational content, this podcast is for informational purposes only and shouldn't be considered personalized investment advice. Always consult with qualified professionals before making investment decisions.
That's right, Sarah. We want to help you become a more informed investor, but every person's financial situation is unique. Use our analysis as one input among many in your investment process.
Perfect. So that wraps up episode 1 of Daily Finance Podcast. Thank you for spending your time with us today. If you found this valuable, please subscribe wherever you listen to podcasts and share us with anyone else who might benefit from daily market analysis.
Until tomorrow, keep learning, keep investing wisely, and remember that successful investing is a marathon, not a sprint. I'm Alex Thompson.
And I'm Sarah Chen. We'll see you back here tomorrow for another deep dive into the financial markets. Take care, everyone.